we're gonna talk substance. We're gonna really take it there. So, as you see, I put up here, right here, becoming a market maker, the psychological trader. So for this month, we'll have 4 lessons, and they're all gonna tie back into becoming a market maker in one form or fashion, in one way or another. So just a sneak peek, next week we're gonna be going over diversification, meaning we're gonna discuss other ways to invest, other business opportunities, and just a mentality you should have as a market maker, regardless of the market, whether it be Forex, whether it be another financial institution, whether it just be, I don't know, some type of culture or society you're part of, um, like a video game culture or like a music culture where you can kind of shift and dictate the culture and notice the trends within anything. And that's what's meant by market maker. It's a bit deeper than just controlling just controlling the market itself, you know what I'm saying? So it's a deep concept to understand, and you can apply it to anything. And once you grasp it and you can kind of expand it past just the realm of forex trading, it clicks a little deeper to where you know how to maneuver in the world. And I think one goal a lot of us are on is becoming that money magnet, that person who just attracts abundance, that brings abundance everywhere they go. And that's really it really starts with the mindset. It really starts with the frequency that you resonate in, a patience that you have, and you essentially attract it and you're ready for the opportunities. So that's what becoming a market maker is. So this week, we're going to be discussing the concept of the psychological trader. Now, this is actually a powerful lesson I've been working on. It I really get it from the late great Mark Douglas from his book Trading in the Zone. And in that book, he refers to a trader known as the mental trader. And I expand on that. Now, the mental trader is someone who sees past technicals, who sees past fundamentals, past candlestick patterns, and they actually see what the fundamentals, what the candlesticks, what all of that represents. Can anybody tell me what everything in the market represents? This is an all encompassing answer. I just want to see where our minds are, where our heads are at. So, what is the market fully? It's not charts, it's not fundamentals, it's one thing. Oh, nice. Okay, I thought we were gonna have trouble getting it. So yes, Maria, exactly. Emotions is for sure. Kevin, you hit it on the head, brother. Reflection of human behavior. That's it. That's it. No matter what we're looking at, it's all a reflection of human behavior. It's all emotions. Perfect, perfect. Because to Blanche, no worry, brother, no worry. So the whole reason that we want to understand, really get it through our head, that the market is human behavior, and it's not strictly candlesticks, it's not strictly fundamentals, it's not strictly patterns. It's twofold. The first reason is because, okay, you don't want to get caught in just becoming a person of pattern recognition, okay? Because the way our minds work is to just pick up patterns, meaning, and this is why the market maker operates in threes, 3 taps to the trend line, 3 candles out of the liquidity zone, out of the hunt zone. Things like that is because the way the human mind is designed, the way we're wired, is to pick up patterns. And for something to be a pattern, it has to happen 3 times, okay? Or it's not a pattern. So once you start to backtest this in the market, once you start to really break down the market maker traps, like we say, once you see it, you can't unsee it. You're gonna see it everywhere. These 3 candles, 3 pushes, and it really shows you that this is human psychology. And a lot of, for instance, you see this trend line, 1 tap, 2 tap. This third tap is going to induce a lot of buys because people are taught third tap, that's a pattern, that's a trend. Even look, the market maker is brilliant. Look how they throw these wicks to the trend line, only to induce. Look how they ride this. And this is where we look for, and look, this is where we look for sells in cases like this. And you'll notice many times it'll be accompanied by what? A support level. So you're telling me to buy this. And I wasn't even planning on going an example, but it's right in front of us. It's right here. Look, market, retail are going to buy off of this. They're going to buy off of this trend line. And would you look what happens? Yes, the market maker wanted to go up, but before they can do that, they had to induce buys, shift against them, trap sellers. See, it's all a game. It's all a liquidity game. And you'll see over and over. See? Over and over. So look, once it becomes that fourth tap, we have a resistance area, and then boom, that's when the move happens. So it's something the market maker does all the time. Once we understand this, we can not get so much caught in, oh, it's a W, oh, it's a head and shoulders. And we pay attention to the traps and we understand why the head and shoulders played out, why the W was significant. It wasn't significant because it was strictly a W, because it was strictly a head and shoulders. It was significant because there was trap liquidity in what that pattern represented. Okay. So hang on one second, got a little note. Okay, cool. De La Soul, 3, magic number. Yep. See, once you see it, you can't unsee it, and you see it everywhere. Um, so that's reason number one to not get caught in the patterns, because the patterns are subject to change. And that leads into the second point. These patterns, these traps, these formations are not gonna be foolproof, meaning something may work today. So maybe this support resistance and trendline trap work today, but a different day it may not work. Maybe there wasn't enough trap liquidity. Maybe the market maker needed to continue down. So it shifted up here, you bought, but then price said, oh, no, we need more liquidity. Oh, you got stopped out, it kept going. And then it did it. And you said, oh, I knew it. I got it right. What did I do wrong? And then you want to figure out why. It may have very well been that the trap was just not ready, that there wasn't enough liquidity. So yeah, we can take the strongest setups by waiting for these stop hunts and waiting for these shifts, right? Because that's kind of our telltale for the dealer. The stronger the stop hunt and the shift against from the stop hunt, the more intel, the more we can be assured that the trap is played out. But that doesn't mean we know for sure, right? So, maybe it was something like this, you know. Maybe this was the third tap that induced. Anyway, the point that I'm driving home here is that you can't know for sure, that the market is human behavior, right? So what that means is you cannot be 100% in the market. You cannot. And you may take a trade today, you may take a trade the next 3 days, and they work perfect. Same setup, same setup, same setup. And that fourth time, that fifth time, it just does not work out. And what you need to realize is that the market is just fluid. It's not gonna be set in stone. So something may work one day and it may not work the next day. This is all human behavior. So what's the point in doing that? It's gonna save you from your own emotions. It's gonna save you from always feeling the need to be right. And the whole freaking point is to see the market in terms of probability and not in terms of concrete. So that's how we need to approach the market in terms of probability and understanding that the market is human behavior. What do we know? Human behavior is predictable, yes, but it's also unpredictable. So we can know the trends, we can know what humans usually do, but it's not set in stone. Think of this like, the great analogy I like is like a Vegas casino. The house always wins, right? Because of how the system is set up, but they don't win every hand. Sometimes people kill it in Vegas. They beat the house, but over time, the house always wins. It's a great freaking business model. So you basically got to see yourself as a casino, and we have the edge. It's almost like you're playing blackjack in a casino and you can count cards, right? And they can't kick you out. So you're not going to win every hand, but you're going to have the advantage. And that's what our edge is. That's where we're really above the retail world because, yeah, we're retail traders, but I can tell you now, there's a lot of there's a huge segment of the retail world that don't even believe the market maker exists. Okay? They think that this is a bunch of hoopla, that this is a big conspiracy talk. They think that the market is actually random. So out the gate, we have the upper hand on them. How we doing? We about halfway. We have any questions? Any questions? No, no. Okay. So yeah, just realize everything in front of you is is an indicator basically, down to the candlestick patterns, down to the EMAs. It's all an indicator of human behavior. That's the only thing. So yeah, even we say don't use a bunch of indicators. If you see it and it's indicating something, it's an indicator. So every candle is an indicator. Just kind of want you to grasp that. Um, so yeah, couple things, guys. I want to just highlight a few points. First one being that just to throw the weight on mental skills really being the key to being successful at trading. Okay. Dave said, no questions, just enjoying you confirming my beliefs as always. Nice, nice. Yeah. And our beliefs are always subject to change. We want to like not get too rooted in them, and especially like our beliefs in the market. And that's why we always backtest. We know the market's always evolving. You know, certain things that used to work 5 years ago in the market don't work anymore. Um, certain traits that the market does now they didn't previously do. Like, 10 years ago, 5 years ago, the market did not gap as much. You know, there wasn't as much retail money. Like none of us were probably trading 5 years ago. At least I don't know. None of us were on these MT4s definitely 10 years ago. This is all new. So if you think about it, if you think about it, we're on the cutting edge of the market, and we need to just continuously evolve and master it. This, we might think that we stumbled into trading and other people aren't even aware of it, but I can tell you every day I get regular Joe Schmoes hitting me up, wanting to know about trading, wanting to get in, wanting to deposit. So it's a global phenomenon, and it's basically marketing by the market maker. It's one big ass induction in the media. You see, in the states now we have commission free trading for stock markets, and that's a whole new thing. And it really started with some of these smaller platforms introducing free trading. And what happens is there becomes a competition, and then there becomes a need for more liquidity. So in the past, liquidity was accumulated different ways, through the economy, through housing market, just ways the banks could take what's yours, make it theirs. And that's what this is all about, the banks taking what's yours and making it theirs. But now we've gotten to the point where the banks, the market maker, are letting us directly tap into the market. and give them all our money because it's easier for them. They don't have to do anything. Now, it's a beauty in that because in the same breath, we could take our money. So we're in the driver's seat as Forexia traders because we're on the other end of things. So only thing standing between us and success is going to be ourselves, like we say. Okay. Terblanche says he wasn't even born 5 years ago, bro. I don't know how you trading. How'd you get your account, bro? Uh, let's see. I think we're gonna see more of that due to awesome content put on YouTube. Thanks, bro. Thanks, bro. So another point I wanted to state: technical patterns, they aren't designed to tell us what will happen next. Technical patterns are not designed to tell us what will happen next. They're going to tell us what already happened. So, why do I say that? Why do I bring this point up? Because many of us backtest, and the number one thing I hear from people who backtest after it's, how do I backtest? It's, I can see it in the backtest, but when it happens live, I can't see it. What am I doing? How many of us have been there? You can see it in the backtest, but when it happened live, you don't know. You just can't do it. Now, me, for sure. Okay. Basically, everyone in this chat is agreeing with that point. Now, how the hell do we get out of that area and get into the point where we can start getting in these moves while using the previous data? It all comes down to what I like to say, it comes down to the traps. And that's why you see me focus heavily on the support resistance and the trend line traps. But yes, it comes down to the liquidity. It comes down to where retail traders, where the masses are placing their orders. So we have to find ways in real time to speculate where the liquidity is accumulating, where the liquidity is. And the best way to do that is that hot button word we like to say, reverse engineer. So we have to reverse engineer what other traders are doing. How do we reverse engineer what they're doing? It's by understanding how they trade. And that's why the focus on the trend line traps. That's why the focus on the support resistance traps, the stop hunt, the M to W is so important because we have to see what they're doing in order to take the other end. Okay. I hope we all get that. Yeah, it's easier said than done, but I'm telling you, the more you start to back test and see these things, you'll never know 100% on a trade, right? But if I see so many traps, I like to highlight my trap zone. If I see this trap zone, I see people buying off here, I see sellers seeing very little profit, then I could say, maybe this the W. Maybe I wait for an ECR, 5-minute time frame, 15-minute time frame, which means what? It means I need some momentum. I can't just catch the proverbial fallen knife. So that's why I love ECR, because it lets me work in line with these traps, but wait for the shift. Because who's to say, the market was done here, trapping? Who's to say, this was the last trap? What if I bought this sell candle right here, and then price just continued down, stop me out with this V3, 1, 2, 3. Yeah, because a lot of people buying off of this. So what does the market maker do? What did I say? Level in stages of 3. So look, it's in everything, even the candlesticks. Because what are retail? Sorry, it's a little bogus. Retail gonna say, oh, look, 3 bearish candles. That means we selling off. Oh, this support level broken. Oh, look, even this wick here, at one point, it's all bearish right here, all bearish. So I wait, I don't enter here and try to buy because I would need 20, 15 pips at least on the stop loss. I wait for this, look, 1, 2, 3, and then it shifts out of the trap zone. Once it shifts out of that trap zone, that's where I look for my entries. And maybe I was wrong. Maybe the trap's not over. Maybe I was right. And that's using as much empirical data that I can in real time. So boom, that's an ideal entry. Let's see. Let's uncover. See? But look, after that trap zone's over, once you have that in mind, look, even look how it comes back to this resistance, throws wicks here. A lot of people are gonna say, "Oh, you're gonna still be selling off this," or if they're buying, they may close or they may have trailed too tight. So I'm pointing this out so you can understand how these candlesticks can trick us, and it's really the human behavior. Because, for instance, this candle is gonna induce sells for humans. That's the whole freaking point. And the other power of this is when you start to see these wicks happen in real time. Let's say you bought off of here and you were just staring at your chart and then you saw price pushing down. You could tell yourself, oh, this is a resistance area. So price, it makes sense for price to reject this to induce sells off of here. And you can keep your cool because you realize what may very well be going on. And then once that trap is set, you know, you get you a nice ECR, it's smooth sailing. But, if you waste all your gas, all your emotional energy in the trap zone, it can be dire because you might not have the mental wherewithal to just, take the easy setups as they present themselves. So wait for it to be clear, guys. Checking the chat here. Can you drop a DMA for a second? Sure. If you want a DMA, I don't need it, but for sure, bro. I'm using Tesla EMAs, really. So I'm using 33 and 96. Look, I don't need a freaking EMA, my dude. You see that, Dave? So yeah, we're still flat right here. But see, there we got our cross, and then these are some nice entries. Let's go on the 5 real quick. hmm Look at these nice entries on the 5. But what was most important was waiting for this to play out, for everyone to sell off of this. Sellers showing very low profits. Okay, so how we doing? How we doing? Any other questions? Hang on one moment here. Okay, bringing up my list of points I wanted to go over. Can I check GU? It went up today. Good so far. Okay, we'll check GU here. Another thing that just wanted to state is that by accepting the random nature of trading, that's how you produce the consistent results. So yeah, that's what we're talking about. Accepting that the market is random and basically the market is inconsistent. And that's how we become consistent by accepting the true nature of the market. And that's where we begin to think in terms of probabilities and not certainties. And yeah, um, last point, guys, just remember it's not about being right and wrong. That is not what this is about. This is about managing your account, about proper risk management, about taking probable setups and letting them play out. All right, well, that is the lecture for today. Let's look at a few pairs. We'll go on to GU. I actually drew this out um, this day. So we drew this out 2 weeks ago, 2 Mondays ago on Ready for the Week. We drew this in class when someone asked to go over it. So, I mean, it didn't happen exactly, but look, hunted, turned support resistance, and then boom, shifted out of this area. Let's take a look here. Clear downtrend, clear resistance, trend line, resistance broken out last month, pulled back, climb back under. Macro accumulation, break high, high, trap sellers below here, shift against sellers, use this as a support. Induce buyers, using support, using resistance, turn support. How come I can't? Oh, sorry. Playing off a trend line, playing off a support area. Micro seller induction last week. Give me a moment, I'm gonna check the chat. Just following my process, okay? Let me just put it like, maybe like this, whatever. Not gonna focus on that too much. So now, let me just go down a little more. Okay, so to me, we're inducing more buys based on these current trend lines and support resistance, but looks like we can still be bearish overall. But currently, seeing bullish momentum. So we may continue to work off of this. Maybe something like this. So this is definitely still inducing. What I'm paying attention to here is this area here. Why is the market maker showing us trend line taps and support traps? Because they want to trap, okay? So even if we are going up, we need to shift against these buyers first. So what I would like to see is buyers get trapped and then we shift back against them. So I could look for, some type of entry here personally. You got similar view. It's weird GU went up like this. Retail was buying. Well, apparently they weren't, because they weren't. I don't think so, to Blanche, because maybe we can see it. This is a second tap, but they're not seeing it. And look what they probably saw. Think about what they probably saw previously when they got trapped on Friday, right? Few days of this gonna get people to sell. This price was working off of here. And this is a lot of times why I like to not take trades on Sunday. I want to see a fresh trap. So look, boom, boom. Now, turn resistance. So a lot of people gonna sell off of this actually, because they're getting multiple sell signals based on their system, their retail system. Multiple trend line, looking like a trend line, and then a resistance turn, a support turn resistance. That's what I'm seeing on the micro traps. Also, large candles used to induce buys. Oh yeah, and look, would you notice? What do we talk about? Threes. Look, once you see it, can't unsee it. Look, check that out, Maria. See, 1, 2, 3, vector 3, as they call it. How do we know if it's a trap or a true reversal when it breaks like that. So you really can't know if it's a trap or if it's a true reversal. All we can really do is wait for the trap to play out. We can always speculate. Um, and Mark English, he might be one to really take you to the next level to understand this, because that's actually where I learned a lot of the traps from. So maybe definitely reach out to Mark. But one thing, because look, Mark will be able to take something right here, like buy this. He just knows. But me, I like to just save myself for myself, wait for some type of shift in momentum, because I really can't know until it play out, me personally. All right, so that's gonna end today. No one even got at me about the free book. No one even hit me up. No one gave me the 4 books of the week for December. So I mean, I'll keep my money. Shout out Maria. She definitely won last time. So all right. Love you guys. Had a fun Monday. I'm so hyped for the year. And definitely DM me if you need to talk. Got any questions? I'm here. Blessings. Peace, peace, peace. Love you guys.